Hey everybody, this is Jim at SP500chart.com. It is Sunday early evening, about 6 o'clock, a little after 6 o'clock p.m. here Eastern Standard Time on November 16th, 2014. We're going to take a look at what happened in the S&P on Friday, what happened over the week, and what that might mean going forward. Before we do that, however, I want to remind you, as always, that the website and this video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I am just a guy who draws lines on charts. So let's take a look. Okay, our first chart is one that we don't use very often, and that is a weekly chart. Each one of these candles is 1 week of trading. And the reason we don't show this very often is because usually the S&P sort of gives us a hint what it's up to clearly enough on a daily chart or on an hourly 30-minute. You know what I'm saying. But looking at this on the weekly chart, you can see just what a narrow range of trading we were in this past week. We really came up very nicely off the 1820s, low 1820s, and now that we've come up to roughly 2040, we've reached this little spot where nothing much happened all week long. That little tiny candle right there describes the week. And if we want to highlight that, we can see that the low for the week was 2030, the high for the week was 2046, the open was 2032, and the close was 2039. So all week long we stayed in a range that was about 0.8%. Now, if you're a candlestick reader, you may look at this and say, well, this is indicative of a moment of indecision. And I would totally agree with that. But I want to show you, you don't know what the final outcome of that indecision is going to be. And I'll give you a case in point. Back in November of 2012, we came up, pulled back a little bit, then we rallied up strongly over 1500, and then we had our little moment of indecision that lasted really about, if you look at it back here in February, it almost lasted the entire month long, where we traded between 1500 and about 1538, 1535 or something like that. We were in a very narrow range right here. But instead of turning over, that was the pause that refreshes, and we rallied back up, and not too long after that, blew out well over 1600. What's another moment of indecision? Well, we had a moment of indecision right here in July, where we rallied up strongly, put on the brakes, were indecisive. That resulted in something of a very short-term reversal. Where's another moment of indecision? Well, we had one right here. That one was a reversal. What about right here? Well, we had a moment of indecision, and then we plowed back up. We had indecision here, came down. Indecision came down. Indecision, we don't know yet. But it is one of two things that's happening. For sure, the market was range-bound this past week. The question is, are we range-bound and setting up for a reversal, or are we range-bound and we're just setting it into a consolidation pattern that will end up being a continuation? I don't want to cop out on you here, but I feel like I have to tell you, your guess is as good as mine. The positive that we have is the fact that we are over the previous all-time high all week long. That high being roughly, 2016, 2018, something like that, wherever we were back here in September. We're over that. But we also are looking at a chart pattern that we've talked about in a good bit of detail that seems to be pointing us in the direction of an eventual move to 2120. The thing is, when you see a pattern and when you have a target, there is really no good way to know the exact path that will be taken in achieving that target level. Sometimes you break out of the pattern and you within days get there. Other times you break out of the pattern and you meander. It feels like 40 years in the wilderness sometimes. And you wonder, are we ever going to reach the promise of what that pattern seemed to be telling us? And right now, if you look at our target here, which when we broke out over about 1970 or so, we broke over this inverted shoulder, head, and not quite a shoulder pattern. That's when we put 2120 on our radar screen. It's interesting to note that if you look at where we've been trading for the past week, and if we were to draw a little box over that, where's my box tool? Where did it go? There it is. If we were to just encapsulate that trading range and then extend it back here, it is kind of interesting to note that it falls almost exactly in the middle of what our minimum target from this pattern is. You'll also remember that very often, especially while we're still in a pattern, you often get congestion at the midway points. That's why when we look at a triangle, I'll stick a line that is at the apex of the triangle, working its way back to the wider part, to see if that line that divides the triangle or the pennant or the wedge, if the line that divides that thing in half, if it seems to line up with areas of congestion, with areas of short-term consolidation, to my way of thinking, that gives you a little bit more information, a little bit more ammunition, if you will, that what you're dealing with is the pattern that you think. So if you have a triangle, for example, and it goes from point A to point B to point C to point D to point E to point F, if you look at that and then you look at all of the midway points along the way, you often see a pause. Now, all of that to say, we broke out, we didn't reach the target, but we are pausing at what is almost exactly the halfway position. Is that a guarantee that we're going to soon see our leg up and the completion of that pattern without there being any selling pressure? I wish I could say so, but I really can't. I would just be making something up if I told you that. It wouldn't surprise me if we once we maybe tag this little line right here that's parallel to our top resistance line, but starts back here on the 1820s bottom. Maybe if we tag that, maybe then we rally up and we meet the target. But like I said, there's no guarantee. In individual stocks, I've seen it happen to where, like I said, you break out of the pattern, you immediately go up. I've also seen it to where you break out of the pattern and it seems like forever, and it's just not going to happen. Then all of a sudden, maybe that particular stock, you lose interest in it, maybe you give up on it. Then you come back a year later and you look at it and you go, oh my goodness, it did exactly what it was supposed to do. So, The S&P has been historically behaving better than that. So let's just see this week if we are able to break free from this trading range. We were in this range all week long. So to be honest with you, I don't really have any great insight to share with you, other than it looks like maybe we've got a little resistance line right here that is moving slightly up. Perhaps we are actually seeing so much buying pressure at this point that instead of going just sideways, we maybe are just having a little bit of upwards bias. If that's the case, maybe we break out over this top line. In other words, maybe our resistance line actually is rising a little bit. But that's purely and totally a guess. It's also possible that if I get rid of our little our little rectangle here, and let's go ahead and kill these little lines there. It's also possible that we may be dealing with, come to daddy. We could be dealing with something of a triangle pattern. Excuse me, not a triangle. It could be a diamond. It could be a descending wedge. You see, maybe this is the bottom line, this is the top line. I don't know. I'm guessing. It could be, you see, we've got a nice peak and then a little decline here. When you see these diamond type patterns, depending upon where they are in context, they can act as continuations. Sometimes they also act as reversals. If it were a large diamond, then I would say I would be more concerned on the possibility of a reversal and a top being formed, because diamonds are almost like a head and shoulders top, only they don't have a flat line at the bottom, or they don't have a neckline that runs straight. Instead, they have this, well, it's a diamond. But, you know, guys, until we see more information, until we get some more trading under our belt, it's all really at this point, sadly, just guesswork. So really, I think all that we can look at in this chart, and using what we've seen over the past few years to bring that to bear with the data that is on this chart, I think we just keep 2120 in mind and expect it to eventually get hit. Obviously, I would have liked to have seen more of a right shoulder on this pattern. I would have loved to have seen something as nice and symmetrical as this small inverted head and shoulders was down here in the middle of October. That would have been wonderful, but we've learned that the S&P has this strange little penchant for cutting that right shoulder short. We've seen that at least 2, maybe 3 times over the past 3 years. So guys, that's it. We just went sideways. Nothing tumultuous, nothing to write home about, nothing to be afraid of, nothing really that scary. All I can say is I'm keeping 2120 in mind, and I'm just going to be curious to see what path that target may, what path we may see for the fulfillment of that target. I want to remind you, there is never a 100% guarantee that anything will happen in the markets except this. If you watch them long enough and you draw lines on charts long enough, eventually something will fail miserably. That is a for sure thing. Nothing works every time. I feel very good about the track record that we've had as we've followed the markets over the past about 4 years now with sp500chart.com or with my YouTube channel. But eventually something that looks really good something that seems to make perfect sense is going to throw me. I won't even say you. I'll take it on myself. Eventually something is going to throw me for an absolute loop. Hasn't happened really yet. It probably will at some point. I'm not that good. So I just want you guys to be mindful of that. That's why I encourage you, do your own research and only invest up to your personal ability to assume and to absorb potential risk. Please be careful. So guys, there's your video in your weekly review for the week ending 11/14/2014. I want to let you know that I'm traveling this week, so I'm going to be doing that funny looking video from my hotel room from my laptop that has just the resolution on my laptop is insane, okay? But it means that when I do this video, I'm looking at something on a 15-inch screen that's about the size of sometimes it looks like it's about the size of the height of 2 of my fingers. So it's really hard to do. And because of the way it handles graphics, it's really hard to make it look right. So please bear with me. I'll still do the video, don't get me wrong. It's just I've got no way of making it look quite as nice as it does when I do this on my desktop in my office in Atlanta. So guys, thanks again for watching. Take care, and especially thank you for your very kind support.